Hey Bowtie Nation, Joseph Hogue here, following the money into the stocks big tech is buying. We highlighted last month the $600 million Nvidia is investing in 6 companies. Stocks up an average 64% in the last 6 months alone. More recently, it was Amazon and the 10 stocks it's buying using $2.2 billion of its own cash to invest and earning an 82% return over the last 2 years, with one of the stocks up 550%. But it's Alphabet, ticker GOOG, aka Google, that beats them both, investing across 39 companies, with most of the $2.2 billion total investment in fast-growing penny stocks. In fact, this list is so big, I'm breaking up Google's investment in 2 videos. In this video, I'll show you its biggest investments, over $1.75 billion in these 7 stocks alone. In our next video, I'm going to highlight the penny stocks Alphabet is buying for the triple-digit returns. And compared to these other 2 companies, Google stocks are even more interesting for investors because of how the strategy differs from those others that we've seen. Where Amazon is investing in stocks for strategic reasons, buying controlling stakes in transportation partners like Air Transport and Rivian, and Nvidia is really investing to nurture the AI ecosystem, and the companies buying its chips like SoundHound AI and Applied Digital. Alphabet is all about the returns though, investing in penny stocks and the fastest growing tech names. Exactly the kind of stocks we love here on the channel. Let's get started with UiPath, ticker PATH, and Alphabet's 7 million shares, worth over $101 million, for about 1.27% ownership of the company. But stick around and I'll reveal what to look for when you're following the money in these 13F reports, and why the difference in investing strategy is important. UiPath is a leader in process automation, the kind of business automation that's going to be key for a lot of companies, and UiPath is a leader in that machine learning and applications making it possible. And this kind of automation isn't waiting on that next generation AI, but is already here with a $30 billion market, the potential for up to $60 billion according to Forrester. While growth has slowed, UiPath has still reached $1.5 billion in revenue, growing 18% over the last year, and is scaling into larger customers. And what I like here about this stock is that new customers often start with some basic cloud automation, but UiPath has been successful at upselling them into platform products. I think the growth is underestimated here, with analysts forecasting just 11% revenue growth next year, so we could see a surprise upside on that, but the company is also already profitable, reducing a lot of the risk you see in tech stocks. Next up, the only penny stock in Alphabet's top 7 investments, Planet Labs, ticker PL, at a $1.3 billion market cap. Alphabet owns just under 32 million shares here, worth $144 million, and a 10.9% stake in the company. Now, it seems like this one is more of a strategic investment for Google, like we saw with Amazon and its 19% ownership of that aircraft leasing company Air Transport, locking in that critical delivery partner. Here we see Google with a 10% stake in the largest owner of Earth imaging satellites. Planet Labs has more than 200 imaging satellites in orbit, more than any other company. This is a large addressable market for defense and intelligence, agriculture, and government services, but also an essential partner for Google Maps. The company is seeing solid revenue growth at about 15% and forecast for 16% next year to $292 million, with more than 1,000 customers already and 90% of them on those long-term contracts. But not really the kind of 20% plus growth we see in some of these other stocks on the list. So there's clearly something more here that's important to Google than just the return. Still though, even this one does have the potential as an investment, trading at a not too expensive 5x sales with that kind of growth and a strong balance sheet. We'll get back to our list of stocks to buy, but if you want to see the 5 stocks I'm buying for the next 30 years, my forever stocks, look for the link I'll leave in the description below. It's a free report I put together with the Motley Fool, some of the biggest stocks in my portfolio. These are the stocks I'm following in major multi-year themes, with one of the picks up 100% and the group up an average 94% last year alone. That report is totally free. You're going to see the first stock immediately, and they'll email you the full report with the other stocks. It's an easy way to support the Let's Talk Money community and see some of my favorite stocks to buy, so look for that link below. Alphabet is also holding one of my long-term stocks in my favorite theme of cybersecurity, with CrowdStrike Holdings, ticker CRWD. Google owns 427,000 shares, worth just over $148 million, or about 0.17% of the company. Now, you out there in the nation are probably tired of hearing me talk about cybersecurity, but folks, beyond all the hype for AI, quantum computing, and even fusion energy, cybersecurity is the one big picture theme that is already seeing revenue growth and profitability for these companies. We've seen a 20-fold increase in the number of malicious programs just since 2014, and tech budgets for cybersecurity have increased at a 10% pace for years. The advent of AI is going to bring a whole new wave of threats, and the leaders in cybersecurity are going to be there to benefit. At an $86 billion market cap, CrowdStrike is one of the largest in the group, and its Falcon platform is a competitive advantage for that single platform protection that tops Gartner's Quadrant list of endpoint protection multiple years in a row. And now, CrowdStrike is partnering with Zscaler on its Zero Trust design, combining both companies' competitive advantages. The company is expected to keep up that 20% plus pace of revenue growth to $4.8 billion next year, with 19% annualized earnings growth to $4.40 a share. The shares have rebounded 61% from the August low after that outage, so the easy money is probably made at this point, but this one will continue higher for years along with cybersecurity demand. Revolution Medicines, ticker RVMD, is fairly large for a biotech company at $8 billion, with Alphabet owning more than 4.25 million shares, worth $211 million, or about 2.5% of the company. Revolution is a clinical stage oncology biotech targeting RAS-addicted cancers affecting hundreds of thousands of new patients each year. This is a very early stage pipeline though, with only one indication in registration, and the rest all in early clinical development, which means significant revenues are likely years out into the future. The company is expected to bring in just $346,000 this year, but potentially $1.4 million in sales next year. Now I'm going to show you why this makes sense for Alphabet next when we look at the portfolio detail. Google Ventures, the venture capital arm of the company that makes these investments, has some deep experience in biotechnology and life sciences. People that have worked in the industry. So I would assume they've gone in deep into the research for this company to make that investment. Here's the thing though, folks, and the reason that we don't really talk about biotech drug developers much on the channel, because you need that deep level of experience to invest. Revolution takes you through dozens of research slides for its clinical stage development programs, and each of those slides is probably backed up with hundreds of pages of research and testing. But to most investors, including myself, it's all going to look like a foreign language. To be successful investing in biotechnology, you really need to understand not just the research, but also the clinical trial schedule and the FDA approval process. Now, you can piggyback on investments like these made by a team of analysts that have gone through that research, but without that deep experience in the industry, whether in pharmacy, healthcare, or drug development, you're waking up one day to find your drug stock has crashed 70% because some clinical trial has failed. I'll reveal those next 3 stocks Alphabet is buying, including its largest investment, over $600 million in a single company. But more important here is how to find these stocks and how to use them in your investing strategy. I showed you how to find these 13F filings in those previous videos that I'll link to in the description below just by going to the SEC Edgar database online and searching for the company name, then clicking through to see where the most recent 13F report is listed for those investments. Remember that disclosure to the SEC by companies or big money players is meant to stop price manipulation by hedge funds, but can also be used by investors to jump in on those investments ahead of an acquisition or just a bump in the price. But like we saw in that Amazon video, the reasoning behind buying a stock in another company may differ, and it's important in determining if you should follow that money into the investment. For example, Nvidia, in the stocks it's buying, seems to be trying to nurture and grow that ecosystem for artificial intelligence. It's buying shares of companies applying AI to unique use cases, keeping those high hopes of next-gen AI alive. And when doing this, Nvidia is also creating more demand for its own chips, the semiconductors tailor-made for AI processing. So supporting these companies is something of a virtuous cycle for the chipmaker. Now that doesn't necessarily mean return is top of mind here, so you need to take these on a case-by-case basis, analyzing each before you invest. Amazon, on the other hand, is being more strategic in its investments, supporting the partnerships it depends on. So while the returns on some of those stocks may be good and the potential is there, it's not necessarily why Amazon is investing, and you need to be careful here as well. Alphabet, though, seems to be investing from a totally different framework. Looking at the 39 stocks, it's much more of a return-driven theme with those fast-growing biotech and penny stocks. 23 of the stocks are companies under $1 billion market cap, so very small companies with that potential for growth. 28 of these stocks, more than 2/3 of the portfolio of investments, is in biotechnology or healthcare. And then this doesn't even include the hundreds of private pre-IPO startup companies Google has invested in as part of its Google Ventures portfolio. Now, of course, there may be an element of altruism here with Google talking up its support of healthcare and funding those breakthroughs that impact patients' lives, but these are also moonshot investments that can 10x in a heartbeat. While the top 7 stocks I'm highlighting in this video account for 80% of the company's public stock portfolio, a full $1.75 billion of that $2.2 billion invested. The median investment across all 39 stocks is just $5 million, and Google has invested billions across hundreds of private companies to get those few that become the next trillion-dollar mega cap. So maybe while it makes it easier in a sense that you can start with this list of stocks as that high growth and return potential, just the sheer number of it makes it more difficult for researching. I would start with the stocks like in this video, the largest investments, research to find the ones you like best, and maybe follow that up with a few of the penny stocks that we'll highlight in the next video. Next is another relatively large stake in Freshworks Inc., ticker FRSH, in which Alphabet has over 16 million shares worth $260 million, or about 5.3% of the company. Freshworks offers employee and customer experience software for businesses driven by AI, so the kind of AI assistance in chat and team platforms that is one of the first real use cases for artificial intelligence. Year-over-year growth has been good at 20% in the most recent quarter, but is forecasted to slow to 14% next year to $814 million in sales. Now, the stock is not particularly expensive at 7 times on that price-to-sales basis, but if that growth does slow as expected, it's going to be a sign that the company is facing competitive pressures from peers, especially big money players like Salesforce Inc. ARM Holdings, ticker ARM, seems to be a must-own for a lot of big tech companies. We saw it on NVIDIA's 13F with over 1.96 million shares worth over $275 million. And here we see it on Alphabet's with hilariously the exact same share count with a 0.19% ownership stake. So maybe it seems that Alphabet is sending a message that it's not going to allow NVIDIA to take control of this company, but at just 0.1%, neither of these companies really have any kind of control over ARM. But ARM is a critical step in the semiconductor industry and that AI theme. ARM licenses its chip architecture out to semiconductor designers like NVIDIA, Intel, and AMD, and those chips are the brains within the servers and edge computing, so ARM is really that backbone on which the entire industry is built. The company has seen its royalty revenue broadening out across end markets, even the ones like mobile and consumer electronics that haven't traditionally needed those high compute chips. Now, ARM did spook investors with its most recent results, showing its first quarter-on-quarter decline in revenue in 2 years, but it is still posting solid year-over-year growth, and last quarter's weakness could be just a timing issue before a big jump this quarter. A full-year growth of 24% is expected next year to $4.9 billion. And while the stock isn't cheap at 42 times on a price-to-revenue basis, it's going to continue to produce a strong return if it keeps growing like this. We've still got Alphabet's biggest investment to highlight. One, it's invested over $610 million to own 6% of the company. But while Alphabet is investing smaller amounts in more companies, Amazon is going all in on just a few with a $1.9 billion invested in just one company. Watch this video in the corner next to see how the world's e-commerce king is investing. Alphabet's largest investment and one of its largest stakes is in GitLab, ticker GTLB, the GitHub competitor. Alphabet owns over 9.7 million shares, worth $614 million at the current price, giving it more than 6% of the company. GitLab is an open-source code development platform for security and IT operations, free for individuals, but through plans for multi-use and enterprise. And if you've heard about coders using AI to help develop, GitLab is one of the most comprehensive tools being used, helping coders deploy faster and with fewer operations. That toolset helps to drive return on investment for enterprise users and a payback period that has helped the company grow to over 9,300 enterprise users in the most recent quarter and 1,000 users above the $100,000 revenue point. And now it's interesting that Alphabet has such a large investment since Google also offers some of these types of tools in its cloud services feature, but GitLab is very competitive in this space, so I guess it's just covering its bases on this growth tech. Revenue is growing at that 20% plus pace that we like to see here in growth stocks, forecasted to nearly $1 billion next year. And earnings growth is really impressive, increasing at an 83% annualized pace to 67 cents per share on fiscal 2026 forecasts. Now, shares aren't cheap here at 100 times on that forward PE basis, but aren't super expensive on the price to sales. And then again, nothing is cheap right now, especially in these kinds of growth tech stocks. So maybe dip your toe in now and buy on any dips the market gives you. See my forever stocks, the 5 stocks I'm buying for the next 30 years, with the group up an average 94% last year alone, with that link to your free report in the description below. Or click on the video to the right to see the stocks Amazon is buying. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.